Hello everyone. Today we will discuss another topic under banking and insurance law. Today's topic is concept of banking fraud. We will discuss what are the various type of banking frauds that exist currently, and we will discuss the concept related to banking fraud. The list of topics to be covered here is concept of banking fraud, then the definition of fraud and banking fraud. There are certain types of banking fraud which are classified as fraud by insiders and fraud by others. Concept of banking fraud. One of the most important responsibilities that a bank or financial institution has is to protect the integrity of the institution by working hard to protect the financial assets that it holds. In order to do so, the bank or financial institution must be certain to address the issue of bank fraud. Definition of fraud. Bank fraud can be defined as it is an unethical or criminal act by an individual or organization to illegally attempt to possess or receive money from a bank or financial institution. The number of bank frauds in India is substantial. It is in increase with the passage of time. All the major operational areas in banking represent a good opportunity for fraudsters, with growing incidents being reported under deposit, loan, and interbranch accounting transactions, including remittances. Now, there are certain types of frauds. First of all, what is fraud? Fraud is an dishonest act or behavior through which one person gains or tries to gain an advantage over another, which results in the loss of the victim directly or indirectly. The banking fraud has been classified as fraud by insiders and fraud by others. Let's discuss fraud by insiders. There are certain types of frauds under this category. First is rogue traders. A rogue trader is a highly placed insider nominally authorized to invest sizable funds on behalf of the bank. This trader secretly makes progressively more aggressive and risky investments using the bank's money. When one investment goes bad, the rogue trader engages in further market speculations in the hope of a quick profit which would hide or cover the loss. Next is fraudulent loans. A fraudulent loan, however, is one in which the borrower is a business entity controlled by a dishonest bank officer or an accomplice. The borrower then declares bankruptcy or vanishes, and the money is gone. Another type is theft of identity. Dishonest bank personnel have been known to disclose depositors' personal information for use in theft of identity frauds. The preparators then use the information to obtain identity cards and credit cards using the victim's name and personal information. Forged or fraudulent documents. Forged documents are often used to conceal other thefts. Banks tend to count their money meticulously, so every penny must be accounted for. A document claiming that a sum of money has been borrowed as a loan, withdrawn by an individual depositor, or transferred or invested can therefore be valuable to a thief who wishes to conceal the minor detail that the bank's money has in fact been stolen and is now gone. Demand draft fraud. Demand draft fraud is usually done by one or more dishonest bank employees, that is, the banker. They remove few demand draft leaves or demand draft books from stock and write them like a regular demand draft. Since they are insider, they know the coding punching of a demand draft. These demand drafts will be issued payable at distant town city without debiting an account. Then it will cashed at the payable branch for paying branch as It is just another demand draft. Now let's discuss the other category, which is fraud by others. First is forgery and altered checks. Thieves have altered checks to change the name in order to deposit checks intended for payment to someone else, or the amount on the face of the check with a few strokes of a pen can change from 100 into any other large figure. Next is stolen checks. Some fraudsters obtain access to facilities handling large amount of checks. A few checks go missing, accounts are then opened under assumed names and the checks, often tempered or altered in some way, deposited so that the money can then be withdrawn by the thieves. Next is accounting fraud. In order to hide serious financial problems, some businesses have been known to use fraudulent bookkeeping to overstate sales and income, inflate the worth of the company's assets, or state a profit when the company is operating at a loss. These tempered records are then used to seek investment in the company's bond or security issues or to make fraudulent loan applications in a final attempt to obtain more money, to delay the inevitable collapses of an unprofitable or mismanaged firm. Next is credit card fraud. Credit card fraud is widespread as a means of stealing from banks, merchants, and clients. Credit card frauds manifest in a number of ways, such as they are manipulated, altered, counterfeit cards are created, fraudulent telemarketing is done with credit cards, genuine cards are obtained on fraudulent applications in the names and address of other person, and then later on it will be used. Impersonation and theft of identity. Theft of identity has become an increasing problem. The scam operates by obtaining information about a victim, then using the information to apply for identity cards, accounts, and credits in that person's name. Each document is obtained and then is used as identification in order to obtain more identity documents. Unfortunately for the banks, identity thieves have been known to take out loans and disappear with the cash, quite content to see the wrong persons blamed when the debts go bad. Phishing operates and by sending forged email impersonating an online bank auction or payment site. The email directs the user to a forged website which is designed to look like the login to legitimate site but which claims that the user must update personal info. The information thus stolen is then used in other frauds such as theft of identity or online auction fraud. Phishing is one of the other mode of fraud created by the others. Next is money laundering. Money laundering has since been used to describe any scheme by which the true origin of fraud is hidden or concealed. Money laundering means acquiring, owning, possessing, or transferring any proceeds of money, of crime, or knowingly enter into any transaction related to proceeds of the crime either directly or indirectly, or concealing or aiding in the concealment of the proceeds or gains of crime within or outside India. It is a process for conversion of money obtained illegally to appear to have originated from legitimate sources. The operations work in various forms. One variant involved buying securities such as stocks and bonds for cash. The securities were then placed for safe deposit in one bank and a claim on those assets used as a collateral for a loan at another bank. The borrower would then default on the loan. The securities, however, would still be worth their full amount. The transaction served only to disguise the original source of the funds. Forged currency notes. Paper currency is the usual mode of exchange of money at the personal level. If forgery of currency notes could be done successfully, then it could on one hand made the forger millionaire and the other hand destroy the economic of the nation. Forged currency notes are in full circulation and it's very difficult to catch hold of such forgers as once such notes are circulated it is very difficult to track its origin. Computer frauds in banks. Computer frauds are those which involves misappropriation achieved by tampering with computer data, recorder, program, etc. Moreover, it is not easily detectable. With the advancement in the technology, computer frauds has been increasing these days, and there are reportedly many number of frauds which are originally caused through the sources of computer and technology.